get this in check. And so where is your next Bitcoin resistance? Let's take a look right here. Okay, so if we look at Bitcoin, one of the things that I'm seeing is there's a lot of resistance at a former level right up here. So you're looking at anywhere between, I would say, 28,800 and 29,000. Now again, look at how price hammered on this level.
Bitcoin is finally moving. After weeks of consolidation, the world's leading cryptocurrency is finally breaking out. But where is it headed next? In this video, Gareth Soloway take a close look at the Bitcoin charts to identify the key resistance levels that Bitcoin will need to overcome in order to continue its upward momentum. Gareth Soloway also discuss his short-term, medium-term, and long-term outlook for Bitcoin, and share my thoughts on whether or not now is a good time to buy. But before we dive into the analysis, I want to remind everyone that this is not financial advice. I'm simply sharing my own thoughts and opinions on Bitcoin. Please do your own research and invest only what you can afford to lose. Now, let's talk about Bitcoin resistance at $29,000. This is a key level that Bitcoin has been unable to break above on multiple occasions in the past. If Bitcoin is able to overcome this resistance level, it could lead to a sharp breakout and a continuation of the current uptrend. However, it is also possible that Bitcoin could face rejection at $29,000 and fall back to lower levels. This is why it is important to manage your risk carefully and to have a trading plan in place. So, what should you do now? If you are interested in learning more about Bitcoin and its price action, then be sure to watch this video. I'll be covering everything you need to know in order to make informed trading decisions. Watch the full video now to learn more about Bitcoin resistance at $29,000 and my outlook for the cryptocurrency in the short term, medium term, and long term.
Bitcoin finally getting a move here. What I think is amazing is that if you watched last week's game plan, on Thursday, I told you guys that your bias in the short term on Bitcoin became bullish. And again, I mean, the little tidbits that I'm dropping in these game plans can literally make you guys money. We have this trend line, right? So we have this trend line sloping up. We had this orange one sloping down. Now, one of the things that I was pointing to, and I'm going to zoom in on this because it's super, super important, is that if we take a look here, we know we had this trend line here, this trend line get hit here, here, and then also multiple times here and once here, and then we broke out. This Thursday we broke out. That changed the bias. From that point, it now became a bullish short-term indicator. Now remember, short-term tells you nothing about mid-term or long-term. It's only telling you about what's going to happen the next few days to week or so. But sure enough, we closed here. We consolidated on Friday and Saturday. Sunday, we ripped higher. Monday, we're continuing up. To me, Bitcoin's going up here. I have positions with verified investing crypto members in altcoins like Cardano, which is showing us a breakout as well, and other altcoins. But the key here again is at some point, resistance is going to get this in check. And so where is your next Bitcoin resistance? Let's take a look right here. Okay, so if we look at Bitcoin, one of the things that I'm seeing is there's a lot of resistance at a former level right up here. So you're looking at anywhere between, I would say, 28,800 and 29,000. Now again, look at how price hammered on this level over and over again before breaking down. What that tells us is whether or not this was at some point support. You know, why it was, we don't necessarily know, but this type of action created support. What that means is if price rallies up into this, this is going to be now resistance to the opposing side. So that is going to be resistance anywhere again, 28,800 to 29,000. Now, should Bitcoin break above this level, let's say it puts in bullish consolidation and breaks up, you have a very clear upsloping channel or trend line that takes you back to between $30,000 and $31,000. So what I do think overall, if we zoom out on the chart, is that this is a common move where we see a move from this low to this low to this low. We then broke through it. Now you're retracing to the scene of the crime, back to test home base. That's a very common thing in technical analysis. But one thing I always tell my traders, never assume a breakout is going to come until it shows itself, right? So many people assume, they get on the wrong side of the trade and they get whipped out. Don't get whipped out. Okay, so that's what we're looking at there, guys. Again, I would just say this is my short-term bias remains neutral to positive, although the upside has now come in quite a bit. My midterm remains still bearish, and obviously, if you ask me where Bitcoin is in 5 years, I think it's much, much, much higher. I just want to show you, I think these charts are very cool to take a look at. So what we've seen on Cardano, right? We saw Cardano essentially creating a consolidation line here. All right, and also what we can see here is we have a trend line, if I zoom out a little bit more even here, a trend line that's been sloping down on this here, right? So we have this line. This is your short-term target on Cardano. They're a little bit higher risk. I love this move up. You do have some resistance right here, but eventually I think this has a chance to get to about 30 cents before it runs into major resistance. All right. Next, we got to talk about gold, guys, because gold has been nuts. It's even surprised me. All right, so gold is down again today. It has fallen off the proverbial cliff. Now, I will say this. So, number one, you have to look at your overall time frames. Now, short term, there's no doubt about it that this move down is bearish on gold. Price has fallen basically $100 in essentially 1 week's time. Now again, short term, we broke this support line. So where are we likely headed? Let's take a look at the chart. What does the chart tell us? The first thing I want to show you is there's a parallel coming into play. See this white trend line up here? I'm going to put a parallel on top of that, and we're going to use the parallel tool here to guide us to this level. And what we can see is the parallel goes right through these lows, and that looks like it's going to be support. Now, to find a good, want congruence. You want multiple levels going through each other, and that's, again, going to give you more support. So what we then do is we look for a pivot point, and what we can do here is if we take this pivot point and we just drag a trend line across, look at that. So now we have this pivot low, which intersects this area right here around $1,810, $1,815. That, to me, will be significant support. Now, that's your short term, right? And you have to be able to divide your short-term investment view between your midterm and your long-term. So what's the midterm? Well, the midterm, to find your midterm, what you do is you zoom out on the chart. And to do that, we clearly see that we still have this upper range of consolidation going on. So we look at the bigger move. The bigger move was this, and then essentially we're doing this consolidation, right? Even with this little tiny move down, which when you zoom out is almost impossible to see, this still tells you that you're still well within the ranges of the midterm view that gold is still on the bullish side. But I would just say this, is if we zoom in just to this area here, I have to wonder if what we're creating, is it an inverse head and shoulders, which is bullish, okay? Now, what I mean by that is you could make a case you have this to this to this, which we're now forming that right shoulder, and if we eventually curl up over here, we have a beautiful inverse head and shoulders for a breakout above this triple top, which again is your neckline. So again, depending on how this forms, for this to form, we're already pulling back for the shoulder, right? Here on this shoulder, we went down to here, right? So you could still go even down to this area maybe, but ultimately, do we curl over and eventually have a major breakout? What's cool about this is we can calculate our target, lowest point to the neckline, and again, that's about $1,600 to $2,100, we'll call it. So it's a $500, a little less than $500. Breakout from here takes you to a target of between $2,500 and $2,600 to complete the inverse head and shoulders. Very, very cool on that chart.